Good morning, everyone, and welcome to NYSE TV Live. I'm Christina Chiu coming to you from above the trading floor of the New York Stock Exchange. And this morning, NYSE-listed Empire State Realty Trust is going to ring the opening bell to not only kick off the trading day, but to celebrate the Empire State run-up, which is going to start tonight at 8 p.m. Eastern. Well, as the name implies, the Empire State run-up features individuals running up the skyscraper's 86 flights, or 1,576 stairs. Now, according to the company, the fastest runners have made it to the top in just about 10 minutes, and we'll have more details about that throughout the day's show. But first, let's take a look at what is on tap over this next hour. We've got a 1-2 punch of inflation data on tap this week, with a fresh read on consumer prices coming out on Thursday before the September wholesale price data is released Friday. Both of those reports coming before the bell, and we'll see how the market trades. To that note, Bankrate senior economic analyst Mark Hamrick is going to join me to discuss what Wall Street is pricing in and how it could impact the Fed's next move. Plus, markets will remain a hot topic throughout the opening bell as we speak with the NYSE Chief Market Strategist, Michael Ranking, about what answers investors will be looking for when it comes to the latest Fed minutes out later this afternoon. Meanwhile, a lot of activity unfolding at this year's NYSE Tech Summit, and we'll speak with the Chief Information Officer at the Stock Exchange, Chuck Atkins, about some of the major takeaways from the event and what C-suite executives are paying the most attention to when it comes to the tech sector. Well, speaking of technology, that sector outperformed in stock market action yesterday, and the major indexes all booked pretty solid gains. Well, this morning, stocks are muted, fractional losses that we see here as we get ready to open the markets. But with minutes from the Federal Reserve's latest meeting due out this afternoon and those two inflation reports on tap, I do want to welcome in my first guest who can walk us through what we need to know. Joining me now is Mark Hamrick, Senior Economic Analyst for Bankrate. Mark, welcome to the show.
Great to be with you.
Great to officially have you on NYSE TV Live.
I love it. Thanks so much. Congratulations on your new role.
Thank you so much. Well, you are an expert when it comes to interest rates, the economy, and I want to start by asking about these Fed meeting minutes that we'll get later today. What do you expect we'll be able to glean from them?
Well, I can tell you what I'm most interested to learn from them, and whether they'll satisfy my interest is another question. But you know, as one who attends the Federal Reserve news conferences, always have my list of questions ready to go. I think the one thing that people sort of walked away from that news conference that Chairman Powell held was the question, why the urgency, right? Because he's basically saying, we feel like policy's in a good place. We don't feel like this is a make-up rate cut because we paused at the July meeting. But yet, they went with, obviously, the higher of the two perceived options, a rate cut of 0.5%. Obviously, we know one voting member dissented, right? And so I think it'd be good to get some color as to what the discussion was. Why go with something that's a stronger dose of medicine? And as you know, the table seems to be set now. We have data to get through for maybe 2 quarter-point cuts through the end of the year. So obviously we then get a total of a full 1% or 100 basis points. So, you know, give us some context about why the 50 basis points, 0.5%.
Yeah, and we know that the Fed does have a dual mandate. Obviously, controlling price gains or inflation is one part of it, and the other part is full employment.
Yes.
So we'll have those inflation reports, as I mentioned, later this week. What do we need to see when it comes to consumer prices?
You know, inflation was misbehaving for a long time, and we just need inflation to behave, right? And that's the expectation, the headline and core for both the CPI and PPI, the retail level and the wholesale level. The expectation is a gain on the headline for both of 0.1% and 0.2 for the core, excluding food and energy. It helps that we've had a decline in gasoline prices, obviously with tensions raging in the Middle East. That is, you know, a source of some future uncertainty, but we have what we have for the moment. And so if we get as expected on the CPI, year over year would likely go from the previous month's 2.5 to 2.3, and it's expected that core stays at 3.2. That likely gets us to the PCE headline of 2%, and that's where Jerome Powell might feel like almost spiking the football because, as we know, 2% is the Fed's 2% target.
That's right. So markets certainly are pricing in it. It sounds like economists as well, Mark, or at least from your purview, 2 quarter basis point cuts, quarter percentage point
Yes.
cuts, 2 interest rates or borrowing costs before the end of the year. I believe the Fed has just 2 meetings left.
2 more meetings.
In November and December.
Yes.
Is there anything in these reports or the data that could change that? Any sort of curveball that our viewers should be aware of?
I think we're always on alert for something that changes expectations, right? And so now we know what those expectations are sort of as of right now. But I do think that, we really were breathing a sigh of relief with that employment report last Friday where, we had a growth scare a couple of months ago, right? And then all of a sudden we had what Austin Goolsbee of the Chicago Fed described as a superb jobs report, right? And so the Fed does not believe that employment is a likely source of inflation in and of itself. We know leading up to 2020, we had a solid job market for many years, and the Fed was undershooting its 2% target. So I think the Fed is really now in a mode where they want to make sure that unemployment does not start spiraling up and being more focused on the maximum employment part of the mandate, because they know that's when the economy starts to sort of come apart if we start having people separated from their incomes with a rising unemployment rate. And I think they believe broadly that barring something that's truly unexpected or a global development, that inflation should continue to meet their goal.
Several guests have joined me and said that they believe that lower interest rates will benefit risk assets like stocks. As we know, investors are constantly searching for yield or return. What does that mean for everyday Americans and even investors who do have money, let's say in a high yield savings account, trying to take advantage of those rates of late?
Love the question. Obviously, if you had one complaint about the stock market right now, it's valuation, right? That's key for those with a short-term mindset. At Bankrate, we're more aligned with those who are investing for their retirement, so for the long term, and we think it's a fool's errand to try to time the market. But obviously, if the market falls out of bed at a certain time, that's going to be of keen interest. People have been rewarded for looking at their 401k balances of late and have not experienced anything particularly unnerving. To your question about essentially savings yields that are really something that more Americans need to be mindful of and achieve their savings goals, we're going to have savings rates fall like a feather in terms of the opportunity to capture yield, whether it's on a deposit account like a high yield savings account, a CD of a term ranging from 3 months to 5 years. And I would say this, like trying to counsel people not to time the market, I would say absolutely shop around for the best yield, but you don't need to nail the yield. You just need to play the game, and having an appropriate mix of asset allocation, and I would throw cash into that in the sense of having that in a deposit account. It's still a good time to save. It's always a good time to save because many Americans don't save enough for emergencies or retirement.
Interesting. Now, Mark, in terms of what we can expect from here, inflation data in focus, jobs data in focus, what else are you watching as an economic analyst?
Well, we have an election coming up, and that's going to be important. We know that that has an impact on consumer confidence. People view the health of the economy through their political identification. And with the election being as close as it is, a good part of the American public, a sizable component of the American public, is not going to be happy with the outcome. So that is one source of not only political uncertainty, but policy uncertainty. I think it's a good bet that we'll still have a divided government, and so that hinders the ability of whoever wins to accomplish what they want. Geopolitical events, obviously, in this dramatic time. And then, we'll continue to watch the Fed, we'll continue to watch the job market, the inflation data, as you know, and the strength of the consumer. That's really key when we go into the holiday shopping season.
Mark Hamrick, Senior Economic Analyst at Bankrate. Mark, always a pleasure to have you. Thank you.
Thank you.
For our viewers tuning in, of course, boardroom remarks are underway, and let's take you there now as we await the opening bell.
CAF. So welcome back to the Challenge Athletes Foundation. And one more. a very, very special shout out to the silver medalist in the Paralympics triathlon, Mr. Carson Clough. Carson, get up, Carson, come on. There he is. Thank you, Carson. Really appreciate it. So, without further ado, I'd like to call up the president of Empire State Realty Trust and today's bell ringer, Miss Christina Chiu. Christina.
Good morning. I'm very pleased to be here today to ring the opening bell for the 46th annual Empire State Building Run-Up, presented by Starbucks Reserve and powered by our official charity sponsor, the Challenge Athletes Foundation. Tonight, more than 650 tower runners from around the globe will gather at the Empire State Building for the world's preeminent tower race. Runners will climb the 1,576 stairs from the doors of the building's Starbucks Reserve to the finish line on the iconic 86th floor observatory, voted the #1 attraction in the world by TripAdvisor travelers, with hopes to beat the men's course record of 9 minutes and 33 seconds and the women's course record of 11 minutes and 23 seconds. We're pleased to welcome one of our athletes here with us this morning, Carson, again, Paralympian who just won silver in Paris, amazing, who will run for the Challenge Athletes Foundation. Team CAF's Heat of Runners raise funds to empower the lives of athletes with permanent physical disabilities. The annual Empire State Building Run-Up is a beloved event at the world's most famous building, and we are grateful to the New York Stock Exchange for the esteemed honor of ringing the opening bell to celebrate once again and bring awareness to this amazing organization. Thank you.
So, Christina, we have a lot of traditions built up over 232 years here at the New York Stock Exchange. The most notable one is what we'll do at 9:30 by ringing the bell to open the markets. But we also...
Well, Empire State Realty Trust has come to the exchange every October since 2021 post-COVID to ring a bell ahead of this Empire State Building run-up. And in fact, this is the 4th year in a row now that the Empire State Realty Trust is going to celebrate this historic event. So according to event officials, about 500 runners will be participating in the 46th annual edition to kick off at 8 p.m. Eastern. And in total, runners will race up the skyscraper's 1,576 steps all the way up to the 86th floor observatory. The fastest runners tend to cover the distance in just about 10 minutes time. That's impressive. Well, the Challenge Athletes Foundation, which helps people with physical challenges lead active and healthy lifestyles, returns as the official charity of the event. And today's bell-ringing company, the Empire State Realty Trust, is a REIT, a real estate investment trust that owns and manages office, retail, and multifamily properties in Manhattan and the greater New York City area, which of course includes its ownership of the iconic Empire State Building and the well-known observatory. Of course, we're going to be celebrating with the Challenge Athletes Foundation here on the floor of the Stock Exchange later this evening as well. Earlier this week, the Stock Exchange homed in on the tech sector. And after the break, we'll be joined by the NYSE's Chief Information Officer, Chuck Atkins, with more.
Joining me today on NYSE Floor Talk is Rinaldo Pazzanesi. He is the CEO at CEMIG. Rinaldo, wonderful to have you here. Thanks for joining me on Floor Talk today.
Wonderful to be with you, Judge. Really wonderful to be with you and to have the opportunity to talk about CEMIG to you and to all your audience.
So let's start off by talking about the recent meeting you had here today at the New York Stock Exchange. Can you give me a summary of the meeting with Governor Romeo Zema, and explain to me how CEMIG's operations align with Minas Gerais' priorities as one of Brazil's key economic regions?
You know that we call this week here in New York the Brazilian Week. There are a lot of Brazilian companies here in New York, and we are here to talk to you and to say that the best place if you want to have clean energy if you want to be on sustainability, the best place for you to be is Minas Gerais. This is actually what Mr. Zema is talking about and what CEMIG provides to all our clients. Okay, we're quite happy to say that CEMIG is part of Dow Jones Sustainability Index since 1999, so 25 years. We are a company 100% clean energy, and we are right now under a huge investment plan to provide the grid and the infrastructure for you to install your company that consumes a lot of power, because this power is going to be 100% clean.
CEMIG promoted a strategic repositioning process recently. Based on this transformation, do you consider CEMIG a solid investment opportunity for investors?
That's it. We are right now executing our largest.
Welcome back to NYSE TV Live, everyone. I'm Christina Chiu here above the iconic trading floor. Well, the New York Stock Exchange hosted its annual Tech Summit this week, bringing together some of the biggest thought leaders in the industry. One such name, Nima Raphael, Chief Data Officer and Head of Data Engineering for Goldman Sachs, sat down with the New York Stock Exchange's Chief Information Officer, Chet Atkins, about the importance of data in a growing world of artificial intelligence. Take a listen.
So I started as a lowly software engineer, and now I run the data team at Goldman, which you mentioned. I run the platform team and also a bunch of our market data, reference data for the whole firm. Sort of the most interesting thing I'd say over the last 20 years has been really that I think 20 years ago, data was almost thought of as an exhaust of the business, and now it's sort of the pivotal lifeblood of the business, and sort of seeing that evolution for Goldman, seeing that, you know, data is the sort of lifeblood of the firm and decisions are made based on that every day, I think has been sort of the coolest trajectory that I've seen.
So Goldman Sachs has an enormous amount of data. How do you approach creating a data strategy that powers the business?
Yeah, actually, we do have a lot of data, but what I actually like to say is we have a lot, we're a medium data size company, but complex data. I think that's what sort of sets financial services and Goldman apart, is we really care about correctness of data, the data quality, and that drives our client experience, that drives what we do in our businesses, our day-to-day trading, PMing, and even our supervisory work with regulators. It all comes down to making sure that sort of the data is correct and used fit for purpose. And now, is like exactly like you said, the AI thing is even pushing us more and more towards making sure that data quality is through the fabric of the whole firm.
Yeah, so data quality, we're talking about data governance, and data governance is just such a critical focus for companies across all industries. How do you see this area evolving, and what role does Goldman play in helping kind of develop these governmental structures?
Yeah, so I think the way, I'm an engineer, and I think you have that background. So the way I think we approach governance and quality is from a platform perspective. We really think about building the tools and technologies and the platforms to enable data quality throughout our whole life cycle journey of data through its life cycle at Goldman. And so the real strategy in the platform and governance and quality comes down to thinking like an engineer, really building on platform, making sure data has single sources of truth across the life cycle, and people are using sort of single APIs to get to the right data for the right purpose. It is the way we think about data and quality and governance through Goldman.
So that leads me right into my next question for you, and that's Legend.
Yes.
And I know you're really excited to talk about Legend. Just give me like an elevator pitch of what is Legend and what are you doing with it at Goldman?
Yeah, Legend is basically the cornerstone of our data strategy. It's the data platform we've built over the last 12 years to manage data through the whole journey of data. So from sourcing data externally, from capturing data from trading systems, all gets built from Legend and then curated through the whole life cycle. And then the best part of Legend is the platform that allows anyone, both engineers and non-engineers, to access data safely, quickly, and be able to then go from idea or hypothesis to insights quickly. on the same platform. So engineers and non-engineers have the same access to the same data with strong entitlements or data access controls across the whole lifecycle. And then that could be used for, again, a BI dashboard, or building a new trading system, or a new algo, or now AI and ML.
All right, thanks to Nima and Chuck for that conversation that preceded the tech summit taking place here at the stock exchange on Tuesday. Stay with us, because after this break, we'll hear more from Chuck about what this year's event entailed.
Dive in deep into the world of cybersecurity with the CEO of Menlo. Together, we're going to talk about the company's inception, biggest trends in the cybersecurity sector, and what's ahead for Menlo Security on this episode of Taking Stock.
So at Menlo Security, we specialize in browser security. So you can think of the browser as the conduit for most people to get onto the internet, and that's where a lot of risk lives. So we're here to basically make the browser enterprise quality, safe, completely resilient against malware, ransomware, the sort of common attacks that you hear of every day.
And what was your motivation to starting Menlo Security? Tell me about that story.
So I've been in the cybersecurity for a long time, sort of over 25 years, and there from the early days on to today. And what we notice is this cat and mouse game with essentially the bad guys, where technology gets a little bit better and then the bad guys get even better than that. Yeah. And it felt to me at the time of starting Menlo, again, over 10 years ago, that we were losing that race as a cyber industry. So we really wanted to kind of think about the problem differently and build something that is safe by design, essentially telling our customers, look, if you let us handle it, if you let us kind of insert ourselves between you and the web, we can guarantee you will no longer be hit by malware, ransomware. We'll make those things go away.
Tell me about some of the key milestones that you've achieved recently.
With the advantage of being a co-founder and being there from day zero, as you think back, there's just a small group of us that started the company, and you think there with an idea of, gosh, let's create a cloud browser and try to play defense differently. To watch that come to reality is very fulfilling. So our first big customer, in fact, was JP Morgan. Had been using us for a long time now.
Welcome back to NYSE TV Live, everyone. Well, Chuck Atkins, the New York Stock Exchange's Chief Information Officer, hosted yesterday the annual Tech Summit in New York that convened a private group of C-suite level executives, industry experts, and investors. As MC of the event, we heard from these leaders on key topics shaping global business, like artificial intelligence and cybersecurity. My colleague Trinity Chavez covered the event as it was underway and joins me now. Trinity.
That's right, Kristen. This event really gained momentum after COVID, and Chuck has been really leading the charge and making it all happen. In the past, we've seen leaders from companies like Cloudflare, Salesforce, and Palantir, along with AI experts from IBM and Oracle, plus investors from Excel, Lightspeed, and Chevron. And this year has been just as impressive. And Chuck is here with me now, well, on Zoom, to talk more about it. Thanks, Chuck, for joining us today. So I want to start off by talking about your fireside chat that we heard from just a few moments ago with Nima Raphael. She is the Chief Data Officer and Head of Data Engineering for Goldman Sachs. What were your biggest takeaways from that fireside chat? And from your vantage point, why do you think that it was so important that you had this conversation?
Well, first I'll say it was just really great to talk to Nima. He has a background that's similar to mine, and today you don't often meet someone that starts off as an engineer, works at a company for 2 decades, and moves up through the ranks. This is my 22nd year at Intercontinental Exchange, where I started as a security engineer. And then as the company continued to grow, I continued to grow my career here as they invested in me. So it was really nice just on that level to talk to Nima and to be able to sort of share in his story and share my story with him. At Goldman, as Chief Data Officer, he spends a lot of his time talking and thinking about data and data governance. And it was really clear talking to him that it's something that he's really passionate about. They have a program called Legend, which they've open sourced, which is a whole platform that they're using in order to provide governance for financial data and to make sure that they have a platform where they can share that throughout their company, and they've open sourced it to offer it to other companies. So it's really nice to hear what they're doing and to hear and see where the industry is going.
And as CIO for NYSE Group, what role do you think you play in shaping the agenda and focusing on the Tech Summit? How does this align with the broader goals of the NYSE?
Well, at the New York Stock Exchange, we're really proud to be at the forefront of conversations, bringing together leaders from across sectors to tackle issues that are shaping the future of business and technology. And that's really what yesterday's Tech Summit was all about. It's really clear that the pace of technological advancement is only accelerating, and the challenges and the opportunities that we have ahead of us are really immense. We have so many great initiatives here at NYSE, like our Launchpad program and the Tech Council, which met day before yesterday. We remain committed to being the premier platform for innovation, collaboration, and growth at New York Stock Exchange. So being able to bring together, really industry experts, and as you mentioned, we had folks from New York Stock Exchange listed companies, we had private companies, we had venture capitalists there, having them share their views and discuss where they see things going, what the obstacles are. It's really a fantastic day at the New York Stock Exchange.
And this event is really known for facilitating those conversations and collaborations among tech leaders and innovators. And you also hosted a few panels talking about enterprise AI, like that we just talked about, from experimentation to production, and that fireside chat that we talked about within your CIO role. So talk to me more about other key themes that you're envisioning for next year's Tech Summit.
Well, next year we want to continue to build on what we've started. This was year 2 at the New York Stock Exchange. We did a San Francisco summit in May of this year. Next year, we've already have the dates circled for San Francisco and also for New York. We'll continue to look and build on what is important to the industry, what we see, where we see technology going. I'm sure AI is still going to be a hot topic, as well as cybersecurity and overall sort of business development trends and what we see happening. Yesterday we had just highlight a couple of the panels. We had Jay Evans from Oracle talking about where Oracle is going and how, as a hyperscaler, they see AI services being consumed in the marketplace. We also had Juan Perez from Salesforce, and he went through how they are pushing AI into production, getting it into customers' hands, and actually seeing return on investment. Those are both themes that everybody in the room were really interested in. Also point out we had Thoma Bravo's co-founder Seth Burrow there talking about cybersecurity and where he sits, controlling one of the largest cybersecurity portfolios that exist. He was in a really interesting place to share his insights on what he sees happening in the industry and where he sees it going. And then finally, I have to mention my talk with Pegah Ibrahimi. She's from Morgan and previously Cisco, and she started her own VC firm. And it was a really fun conversation where we talked about how tech leaders, and everybody in the room was essentially a tech leader, talked about how tech leaders can start to transition out of the tech box that some of us feel that we're in and get more involved in business units, and maybe even start thinking about how they could play in the venture capital world. So really, really cool day, really great conversations.
And it's really interesting how all of these technological advancements, as well as the development of AI and cybersecurity, really go all hand in hand, and that the NYSE is at the forefront of these conversations, hosting events like the Tech Summit that you really spearheaded, Chuck. So thank you so much again for all of these key insights, and we look forward to next year's coverage.
Thanks, Trinity. They say it all happens here, and it's true. Thanks a lot.
All right, take care. Now we're going to listen in on the opening bell, and I'll meet you all on the trading floor.
Welcome back to NYSE TV Live, everyone. Now that stocks are open, joining me is resident expert Michael Renking. He's our senior market strategist for the New York Stock Exchange. Michael, great to have you. Bit of a muted open after what was a pretty solid session yesterday. What's your take?
Absolutely. Well, thanks for having me back on. And yeah, look, I mean, yesterday we had markets recouping Monday's losses, right? So coming into the week, we saw oil prices moving sharply higher, treasury yields moving sharply higher. They had both crossed pretty psychological levels, with ICE Brent moving above $80, the treasury yields moving above 4%. That caused some of the weakness on Monday. And then yesterday we recouped those losses. The S&P 500 pretty much close to the point where we were on Friday, right? So, but we're back within kind of 20 points from the all-time high in the S&P 500. What we also saw yesterday, though, was a little bit of shift under the surface. We saw those mega cap tech stocks, show some leadership yet again, and other areas of the market didn't rally, kind of quite as strong, right? So that's kind of something to kind of pay attention to as we move forward here.
I think a lot of people are wondering just how much room there is for risk assets to run as we do anticipate even more rate cuts ahead. What do you think?
Yeah, look, I think the backdrop is still pretty positive, right? The economic backdrop continues to point to kind of that soft landing narrative, and being able to kind of pull that off. We have the election, which kind of typically creates some volatility heading in. But when you look back at historical data, that back half, kind of following that election, and when there's a little more certainty, markets do tend to trade pretty well. Going back to what I just said about kind of the mega cap tech stocks, if you think about it, those stocks have really kind of just traded sideways for the last kind of couple months. If you actually start to see those those names moving to the upside again, that will significantly push the S&P 500 higher, just given the heavy weightings.
We have the Fed meeting minutes on tap later today, released at 2 p.m. Eastern. What should investors glean from those?
Yeah, so typically the Fed minutes aren't necessarily all that market moving. We have heard quite a bit from Fed officials over the last week or so since that meeting. So I'm not necessarily expecting anything kind of overly dramatic or anything kind of really groundbreaking. But what will be interesting is to see, given this that last rate decision was a little bit controversial. It'll be interesting to see kind of what that conversation looked like in the room, how much Chair Powell had to really kind of pull other officials along with him to get that 50 basis point rate cut.
And Michael, as our viewers see on screen right now, members from the opening bell podium making their way down those stairs back onto the trading floor, signing the iconic wall where everyone who's celebrated the opening bell on the podium has signed their signature. The Rock, Serena Williams. Way back when I even signed that podium. I even signed that wall actually one day. But
maybe one day I'll get a shot. We'll know.
It is very iconic indeed for our viewers following along. Let's talk about earnings season, because that's going to be a major trend that will start developing here in just a few days. Of course, unofficially kicking off at the end of the week with reports from JP Morgan and Delta Airlines. What are your expectations when it comes to corporate earnings?
Yeah, look, I mean, this is the time of year where we get to try to move away from some of that macro focus back, to the micro. It's interesting this time around. Like, there's not a whole lot of buzz heading into earnings season. Last quarter we saw the biggest year-over-year growth rates for the S&P 500 since 2022, and then this quarter, analysts are looking for earnings growth rates of about 4%. We have seen some negative revisions to those numbers, heading into the quarter, potentially kind of lowering the bar for companies to clear that. It will be interesting to kind of see the market reaction, though, to those reports. If you look at options markets, they're pricing in, kind of pretty extreme volatility heading into the, kind of heading into earnings season. And part of that is related to kind of the upcoming election. So that does factor in there as well. But it'll be interesting to see, kind of if companies are beating numbers, kind of are the stocks rewarded just given where we are, kind of from a pricing perspective.
Yeah.
With markets right around all-time highs.
I'm not sure, Michael, how closely you've been following volume, but in terms of conviction behind the trade, is there the trades of late, right, with stocks still near record highs? Anything to take away from that aspect?
Yeah, I mean, volumes have trailed off a little bit, kind of coming out of a record closing, during the the last options expiration and quarterly rebalance. We had a record closing auction here on the NYSE. We have seen kind of volumes trailing off a little bit. If you look at the S&P 500, it's traded in a very, very tight range. Call it 56.75 to 57.50. Kind of over the last couple of weeks, and we're just kind of sitting right above, right below those all-time highs. As we had talked about kind of a couple weeks ago, when we do break, we want to see that happen with some authority, right? We haven't quite had that, just yet. But we could be earnings season could be the catalyst to get us there.
Yes, and stocks pretty much just flat, Michael, as we're talking. So investors still seem to be pretty cheery when it comes to sentiment here in this market.
Yes, we have a big catalyst tomorrow too, where we have inflation data. So that's gonna, that's another big catalyst that's just over the horizon here.
Very much so. Thank you for pointing that out, Michael Ranking, of course, here with the Stock Exchange.
All right, thanks for having me.
Well, another emerging storyline on Wall Street, and one that we've certainly covered extensively on NYSE TV Live, is the latest wave of IPOs. Today, another notable name, KinderCare, is set to start trading here on the stock exchange under the ticker symbol KLC. Well, the company, which is partnered with more than 600 organizations, has over 2,300 early learning centers and programs across the country. Later this week, we'll show you my sit-down interview with the company's CEO, Paul Thompson, where he'll discuss the company's biggest goals for the rest of the year and 2025. Well, we got plenty more to get to on NYSE TV Live this morning. Stay with us.
Joining me today on NYSE Floor Talk is Jonathan Martin. He is the president at WECA. Jonathan, fantastic to have you back. Thanks
awesome
for joining me.
Be back. Seems like only a couple of months.
It was a couple of months. So last time you visited me, you had talked about WECA's expanded partnership with NVIDIA. So what's your news today?
So we have some really, really exciting news. We have just are announcing a milestone round of funding for WECA. That's a Series E rounding of funding. It's $140 million, $100 million in a primary and $40 million in secondary, with a post-money valuation of $1.6 billion.
Now, WECA has a $1.6 billion valuation, so you're officially a unicorn.
We are officially a unicorn. Thank you.
So we're seeing a lot of AI startups netting huge valuations now. In comparison, your $1.6 billion valuation is moderate. Can you give us a context as to why?
Yeah, so valuation to some degree is a personal preference. And over the last few years, we've seen many companies in this space taking advantage of really gargantuan valuations. And the challenge always with that is, while it's great for the founders, it's great for the team, their secondaries, it's a challenge because it's sometimes hard to grow into those valuations. And secondarily, if you've already got a very large valuation, it's very hard to attract top talent because there's effectively no equity left in the company. So we decided to take a much more kind of moderate to aggressive approach, I would say, which allows us to quite easily grow into the valuation, secondarily keep attracting phenomenal talent. For us, this is it's a marathon, not a sprint, and this will be one of probably many.
Welcome back to NYSE TV Live. I'm Trinity Chavez, and right now the market is open. It looks like it's about flat, but you know what? I'm going to bring in my colleague, Ron Buller. Why don't you tell the audience exactly what you do here at the New York Stock Exchange and working with this company?
So the New York Stock Exchange, we are incredibly fortunate to have 2,400 of the greatest companies in the world calling the New York Stock Exchange home. And one of the great things we get to do is put the New York Stock Exchange brand alongside all of these great companies every single day. One particular time we do it, opening bell. We also do it the closing bell. This morning, Empire State Realty Trust celebrating the Empire State run-up. And what better way than utilizing one of the most visible platforms in the world, our opening bell.
Well, walk us through exactly how you work with our NYSE listed community. We have over 2,400 listed companies. Talk to me from your vantage point and the role that you play here, how you work with these clients.
Sure. So a big part of my day-to-day is interacting with the management teams of all of the listed real estate and REIT community. And it means making sure that they're aware of all the resources and the benefits and the services that this great NYSE platform could deliver for them to help, whether it's get their message out, talk to investors, host board meetings, and just get more visibility for their trading in their stocks and things that they do.
And you know, as a real estate lead here at the New York Stock Exchange, walk me through some of the biggest trends we're seeing right now when it comes to the broader real estate sector.
Sure. So if you look at the way the markets performed, you know, Q3 was a great quarter. We had about 5% gains in the S&P, markets up about 20% year to date. But over the last, say, call it 14 to 18 days, market's been fairly flat, trading in about a 100-point range. In the real estate space specifically, in the beginning of October, we're down about 3%. We're seeing some profit taking and what we'll call consolidation, where stocks are trading in a tight range sideways, trying to figure out our next move. A big part of that has to do with Friday's NFP number, which came in a little bit higher than expected, and it's changing the way the market's looking at potential Fed rate cuts for the rest of the year, which is not necessarily, you know, a great sign for the real estate space in the coming months.
Yeah, and it's already October, so we're nearing the end of the year, actually. So talk to me more about the REIT space, how all of this is impacting that sector.
So on a positive side, the recent 50 basis point cut has created a little bit more, I guess, transaction volume, people talking about things being able to trade, some assets being able to be sold and or purchased. But with an election in a month, you know, then December and the holiday season, I think we could see a little bit of a, I guess, I don't know if a slowdown is the right word, but a continued consolidation and uncertainty until we have a little bit more clarity in the markets on what's going to be going on from a political standpoint and also economic.
You know, you bring up a lot of good points when it comes to the geopolitical turmoil that's unfolding overseas, you know, but we also have the strikes, you know, that have been postponed until January 15th. A lot of other market news, though, is moving headlines. So how do you anticipate we're going to go into 2025 when it comes to the broader real estate sector and the REIT space?
So generally speaking, the real estate space does better when there is certainty, because then you can look forward, do transactions, have a better idea of your cost of capital, what the environment's going to look like. So a lot of people I've spoken to are very optimistic about first quarter and beyond. Once we get, as you said, the political uncertainty out of the way, some of the rate uncertainty. Granted, global political unrest will always be there in some way, shape, or form, but most people are fairly optimistic looking ahead into 2025.
Well, and IPOs are saying that too. I mean, they've really been picking up, and you know, the sentiment here on the floor is that it's really going to kick off in 2025. So a lot to look out for, Ron.
Definitely, and we can only hope. You know, it's been a quiet couple of years, but we are seeing the doors open a little bit. We had a recent REIT listing last week, which was great to see. We have another company pricing this morning. Couple more in the pipeline, so hopefully, yeah, onward and upward into 2025.
Onward and upward, we like to say that here. Well, thank you, Ron. I know that you have a very busy day ahead of you, so thanks for joining us.
Thank you, Trinity.
Now, we have a lot more to get to, and we're going to take a quick break, but we'll meet you right back here on the floor. So we're a cybersecurity company focused on enabling businesses to innovate and do everything they can to secure their organization, reputation, and customers against cyber attacks. But what sets it apart from its competitors? We're going to find out from the CEO on this episode of Taking Stock.
We were founded on a very simple premise that our customers are outgunned in the cyber war every single day. They're facing thousands of adversaries, and very quickly they're outmatched. And we help bring that hacker army to bear to help them find the right person in the crowd at exactly the right time to defend their environment and help ultimately protect their customers' data.
How do you stay ahead of these threats? How do you help your customers stay safe?
So for our customers, what we hear from them on a daily basis is that they're nervous about how quickly the adversary is continuing to adapt. That's where this crowd and this hacker army really provides value for them. You're getting the best and brightest, whether it's across AI, whether it's across a telco that we work with, or some of the other large customers. They're able to get the exact skill set that they need at exactly the right moment in time. So for our customers, our platform is connecting them to all of this amazing creativity that exists and they're accessing folks that otherwise they would have no way of actually hiring full time. So for them, they're able to stay a step ahead of the cyber attacks that they're facing by leveraging the ingenuity that exists within this crowd.
So congratulations. Bug Crowd recently announced $102 million in strategic growth funding. Tell me about this and why it's so significant.
Yeah, this is a huge milestone for us. We are so excited as a team. We made this announcement recently. Could not be happier to partner with General Catalyst. The amount of experience and the diversity of opinion.
Welcome back to NYSE TV Live. I'm Christina Chiu here above the trading floor. And time to evacuate is running out as Hurricane Milton closes in on Florida. The Category 5 storm is expected to trigger a life-threatening surge when it hits. And joining me now as we anticipate its landfall is Intercontinental Exchange meteorologist Dave Margolin. Dave, it's great to have you on the show. Of course, we are thinking of everyone down in Florida as we're on the air. What are the storm patterns indicating as to when Milton will hit?
Yeah, thank you, Kristen. So Milton is an extremely dangerous Category 5 hurricane right now. Maximum winds are at 160 miles an hour. The storm's located about 250 or so miles southwest of Tampa, and it's moving toward the northeast about 10-15 miles an hour. Already, we're starting to see some of the outer bands influence or impact the west coast of Florida. And in terms of landfall, right now the projected timing is somewhere maybe around or within a couple hours after midnight. The expected intensity at landfall is around a Category 3 or 4, but regardless of whether it's a high 3 or low 4 or anywhere around that, it is a major hurricane which is likely to have major impacts for the Tampa area and surrounding areas.
Talk to me more about those impacts, quantify what it could mean for those people who are deciding not to evacuate and instead riding out the storm in place.
Yeah, so we have to start with the storm surge. Historically, the storm surge is the most deadly and damaging aspect of a hurricane. And with Milton, it's probably going to be no different right now in the Tampa area. We're projecting storm surge in the 10 to 15 foot sort of level, and then you have waves on top of that. So the bottom line is, if you are near the coast, near the Gulf of Mexico coast there, or Tampa Bay, within a few miles, you need to get out. And really, you have a few hours now because, as we mentioned, you're going to see deteriorating conditions this afternoon. So right now, the next couple hours are critical. If you're near the coast, you've got to get out. If you're a few miles inland, the bigger concerns there are going to be the winds, which again, as we talked about, could be over 100 miles an hour in the Tampa area, and the excessive rainfall, which is going to be in the area of 8 to 12 inches, maybe locally higher amounts.
We had just seen Helene and the damage that brought. How do you expect this storm, Milton, to stack up against others?
Right, so the one fortunate thing about this storm is it's not going to move north through Florida back into the southeast United States, like North Carolina and South Carolina. So, you know, the recovery efforts that are going on there, thankfully, should not be impacted. However, for the Tampa area, this is going to be, it looks like every bit as severe in terms of the winds, in terms of the storm surge, and in terms of the potential impact to both people and the economy for that area.
Because this period is so critical, Dave, my final question to you is, with more than 1 million people in these coastal areas under evacuation orders, what do residents need to know as time is running out?
Right, so again, the last chance to really get out is literally right now. You should have done already, but you know, you have a couple hours. But you have to be careful, right? We already know that the roads are congested. Gas lines, the gas stations are running out or just closed. So you have to take that in consideration if you are planning that last minute evacuation. But otherwise, I think it's about hunkering down, right? If you don't have shutters on your home, get them on now if you have them. Make sure you have a safe place in the interior of your house. Make sure, obviously, your animals are inside. If you have any debris, anything outside, get it inside, get it into your garage so that it's not going to be a missile flying into your home. And also get your car and any sort of larger kind of items into the garage safely away from the winds.
Dave, so good to get your take, especially in this critical time. We are thinking of all those residents in Florida still there and those who have left and left properties behind. Dave Margolin is the meteorologist here at Intercontinental Exchange. He'll be joining us the rest of the week. Thank you.
Thank you.
Well, stay with us because we'll have much more coverage from the trading floor right after this short break.
Joining me today on NYSE Floor Talk is Manish Sood. He is the CEO, founder, and chairman at Reltio. Manish, wonderful to have you here. Thanks for joining me today.
Well, thanks for having me here.
So I want to start off by talking about the company. Tell me about Reltio.
So Reltio is a data unification and management company. And the problem that we solve is in the enterprise, you have lots of silos of information, fragmented information for customer, product, supplier type of data that most of the businesses depend on. And because of the state of the nature of the enterprise today, we bring that information together so that each and every action out of a business can be accelerated and done faster. And that's the capability that we provide as a software as a service solution built on public cloud infrastructure.
Can you give an example of how your technology has transformed a customer's operations or driven significant business outcomes?
Absolutely. So one of the customers that we work with is CarMax. And if you think about their business, they're in the business of buying and selling vehicles, used cars. But their guarantee to their customers is that in 15 minutes or less, you can be done with the transaction. Think about the experience that you used to have before versus you have now. But in order to drive that entire operation, they have to think about every touch point that they have with the customer, every vehicle that is being bought or sold, and knowing everything about that vehicle as well as the customer's preferences. So that's where they use Reltio as the underlying platform to bring together all the information about their customers, the products that they're buying or selling.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here in studio. My colleague Trinity Chavez recently sat down with the CEO of Vapor.io to talk about the latest moves that we're seeing in the artificial intelligence space. Take a look.
Hey there, I'm Trinity Chavez, and you're watching a special edition of Taking Stock in collaboration with SiliconANGLE's theCUBE. We're offering exclusive insights from some of the most influential leaders in the AI industry, all a part of the NYSE Wired community. And to start things off, we're joined by the CEO of Vapor.io, the pioneers leading the charge in edge computing.
We are a digital infrastructure company focused largely on artificial intelligence and massively distributed networking capabilities.
And you know, your company is described as one of the world's first true edge computing companies. Explain what that means to Vapor.io.
A little complicated, but the internet as we've built it is architected in such a way that AWS, Microsoft, Google, the big companies that we know of when we talk about cloud, they're largely centralized. We wanted to build the internet kind of from the opposite end, so starting from the edge out as opposed to these centralized cloud companies building central out towards users. We're more focused on the applications and the industries and the footprint that needs lower latency, closer data proximity, et cetera, which is it's a different take on cloud.
How has the rise of 5G increased the demand for lower latency applications?
5G itself is a technology that increasingly relies on lower latency capabilities, especially with how we are slightly differentiated with that AI angle that we just discussed. Additionally, the key economic unlocks for the applications that can be powered over, say, a low latency 5G network are only now technically available to the masses and the enterprises that would consume these reference architectures that necessitate the use cases that need that latency profile.
And edge computing is a relatively new concept, so tell me how it's being integrated in various sectors.
Edge itself is not new. We've actually been doing edge for quite some time, but the concept of edge computing in a distributed kind of AI-enabled fabric, that is new. And again, it is highly differentiated in that the contextualization for all of the things that you normally do in artificial intelligence, like training and tuning and inferencing, that fabric needs to exist, and Vapor is the company that solved this at the edge first.
Now, as edge computing becomes more widespread, what challenges, if any, do you anticipate, and how do you expect Vapor.io to position itself to be able to address these challenges with a changing infrastructure?
There's both technical, economic challenges that go into operating a footprint like this at scale. A typical cloud provider might be deployed in, say, 12 locations around the US. We're deploying in 110 locations across the US. So you can imagine the logistics and the supply chain and the operational efficiencies that need to be built into operating a network at that scale. Our goal is to just keep up with the automation and the real estate side of the implementation of a footprint like this.
Do you have any key priorities over the next 12 to 18 months?
Our goal is to really become a major player for these AI applications that require real-time inferencing. So instead of training, which is a hot topic at the New York Stock Exchange these days, which is very important, we focus more on the real-time monetization of those models, and we want to be a dominant player in that space.
AI, of course, always a hot topic of conversation here for us at the Stock Exchange and investors alike. And Trinity joins me now. Trinity, I see you down there on the floor of the Stock Exchange. Talk to me more about this conversation and what really stood out to you about this particular company.
Well, Kristen, as you heard, Vapor.io sets up and runs clusters of small automated data centers near key network hubs in cities across the United States. Now, these data centers are all connected by high-speed networks that cover both local and national areas. But what's great about this is that if you have this setup, your equipment in Pittsburgh, it works the exact same way as it would in Dallas, for instance, or any other city where Vapor.io operates. So you only have to figure out your setup one time, and then you can easily replicate it everywhere and anywhere you go. So this could be extremely beneficial for businesses to run more efficiently and effectively. And from what I gather, the response has been extremely positive. Vapor.io is even teaming up with IBM to boost cloud networks and working with the city of Las Vegas to bring real-time AI to improve city operations. So a lot to look out for.
Trinity, fascinating stuff. And of course, we know so much investment is going into the city of Las Vegas right now. So it'll be fascinating to see how that unfolds. Trinity Chavez joining me on the floor. I'm Kristen Scholler here up in studio. We had a great show today. A lot to cover, Trinity. And in fact, more IPOs set to hit the market. So we'll be talking about that more in tomorrow's show. Thank you everyone for watching. Have a great day.
In life, I'm reminded that it's not about the destination, it is truly about the journey.
My pleasure to greet you today from the center of the U.S. capital markets here at the New York Stock Exchange.
I want to just take a minute and not just talk to the people that are in the room, but I want to speak to the rest of the team around the globe. These are people that made this happen, and I know that there is no way we would be here if it wasn't for you.
Everyone at Flutter is proud to join such a distinguished list of companies on this great stock exchange.
Not many people get to do something big in this world, and we get to do something truly special.
This is such a wonderful place to both look back and look forward. Look how far we have come. I'm so optimistic about what lies ahead. It has been a privilege.